Thanks for joining us this morning. It's a beautiful day here in Seoul, and I'm Lee Ji-yoon. Coming up on today's edition of Business Daily. Going head-to-head, Korea faces U.S. private equity firm Lonestar in a high-profile legal dispute. We take an in-depth look at this case. More people here in Korea are buying imported cars as companies carve out a stronger foothold in the country. These stories and more coming right up. A red light is blinking on the export front as many Korean companies struggle in the face of a weakening yen. A survey on 300 firms by the Korea Chamber of Commerce and Industry found that 70% did not have a plan B in place to offset the impact of the depreciating Japanese currency. More than half said they had already incurred losses in exports. Several companies were driven to cut their prices to keep their Japanese clients. One company selling photochemicals reporting it was offloading its products at base price. The survey also found that Korea's export volume in categories in competition with Japan takes a 12% hit every time firms in the neighboring country lower their prices by 10%. Korean consumers have a more positive outlook about the future, with an index measuring consumer sentiment maintaining an upward streak for the month of May. According to the Bank of Korea, the composite consumer sentiment index for this month was 105, 1 point higher on month. A figure over 100 shows positive sentiment for the future. The index combines 6 major indices, including the outlook people have for their living standards and conditions of the local economy. Both went up by 2 points from the previous month. The index had been fluctuating until March, but has held its upward trend since April. Korea's bad loans have edged up to $22.5 billion. Its ratio to total lending provided by banks standing at 1.56% in the first quarter of this year. That's an on-quarter growth of 1 basis point, according to the Financial Supervisory Service. Most of the bad loans came from corporate debts at 89%, while bad credit card loans as well as household debt, which actually fell in Q1, made up for about 10%. The popularity of imported cars are only growing here in Korea, handing local car makers a headache. In fact, import cars grabbed 13.6% market share in April, compared to the 10% held just 2 years ago. And through aggressive marketing, it's carving out a stronger foothold here in Korea. Our Eunice Kim has the story.
A car moved into a garage is checked for leaking oil and fluids, ensuring all filters, plugs, and engine mounts are in place. Electrical systems are clear, and the chassis and body perfect. It's part of the Mercedes-Benz 178-point inspection before a used car is given the certified pre-owned mark as part of its Star Class program. The German brand's used car business landed in Korea in 2011.
Our ultimate goal at Star Class is for our customers to experience the same value of a new Mercedes in one of our certified pre-owned vehicles.
This is one way that import brands are getting closer to their Korean customers, while at the same time keeping the resale value of their vehicles up, one established drawback of buying an import car in Korea. Showrooms that were once limited to the capital region have expanded by more than 150 locations in a span of 5 years, spreading into less populated regions, including the island of Jeju, which went from 1 to 7 such showrooms. This as the number of registered imports reached a new monthly record high in March, effectively doubling the number of units sold since crossing the 10,000 mark 4 years ago. And they're continuing to up their game. They're expanding service shops, addressing long-held gripes of how costly and inconvenient it is to repair an imported car in Korea. Helped by the relatively strong won, prices are leveling more to those of domestic car makers as brands like BMW, Volkswagen, and Audi become less a symbol of extravagance and through aggressive marketing, more a competitive option. Eunice Kim, Business Daily.
Back in the spotlight is a multi-billion-dollar case involving U.S. private equity firm Lonestar and the Korean government. After filing an investor-state dispute lawsuit against Seoul in 2012 regarding the sales of its shares in Korea Exchange Bank, or KEB, the first hearing ended this past Saturday. Let's find out what this is all about.
Back in 2003, private equity company Lonestar bought a controlling stake in Korea's KEB for roughly $1.27 billion before selling it to Hana Financial Group in 2012 for $3.9 billion. Despite the more than $4 billion in profit, the firm claims Seoul's delayed approval of the deal caused major losses for the company. Lonestar is now demanding nearly $4.7 billion for lost profits and taxes. Seoul has refuted its claim, saying approval was delayed due to a separate investigation into stock price manipulation. The case now sits in front of the International Center for Settlement of Investment Disputes under the World Bank. Being Korea's first investor-state dispute battle, the case has come under much scrutiny, with billions of dollars at stake.
And to tell us more about this case, we're now joined by attorneys Hong Gi-ho of Lawyers for a Democratic Society. Welcome to the program.
Good morning. Thanks for having me.
All right, so let's first go back to 2003 when Lonestar first acquired a controlling stake in Korea Exchange Bank. What are some of the main events that took place since then?
Yes, it started in 2003 when the Lonestar Fund invested in KEB stock through the Belgian paper company. In order to realize the sale profit, the Lonestar Fund applied to the Korean authority in order to get the approval of the sale. But in 2006 and in 2007, Korean authority denied the approval. So Lonestar finally, in 2011, finally he could sell the KEB stock to Hana Bank. So Lonestar filed on international arbitration dispute mechanism to the exit in 2012.
Okay. All right, well, despite seeing substantial profits, Lonestar is still demanding nearly $4.7 billion and saying that the Korean government actually delayed the sales of its stakes in KEB. Where do both parties stand in all this?
Yes, Lonestar argues that he loses a very big, very great opportunity to gain much profit at the sale only due to the unjustified delay of the Korean government. But Korean government argued that it is a legal measure under the Korean Banking Act. Under the Korean Banking Act, the criminal offender lose the qualification to have the majority of the KB bank. But the Lonestar Fund, Lonestar Fund was a criminal offender under the Korean Supreme Court decision in 2011. So Korean government argued that the delay is a very, very legal activity only because of the Lonestar's offender.
Okay, well, another issue laying behind this is taxes. Lonestar says that that Korea imposed taxes on its gained profits and it should have been exempt from those taxes. Do you think this claim is fair?
This issue is related in international tax treaty. Lonestar argues that under the Korean Belgium tax treaty, Belgian company is exempt from the imposing of tax. But the Korean tax authority and the Korean Supreme Court concluded that the Belgian paper company is only a paper company only to avoid the tax. So Korean Supreme Court decided that Korean tax authority can impose to the real beneficiary of Lonestar. So this issue is a very, very decisive and complicated issue because this issue is not only within the Korean local act, but with related to international tax treaty.
All right. Well, considering that it's a major case involving billions of dollars and other international firms and whatnot, what will be some of the decisive factors in this case?
Well, as far as I'm concerned, it depends on whether the Korean government can raise the issue of the legitimacy of the Korean government's measure, especially under the Korean Supreme Court sentence, the Lonestar lost the qualification of holding the majority of KEB because of its legal offender. So it is very important to raise the issue and persuade the arbitrators in Washington, D.C.
Okay, well, there's a quote by the Financial Services Commission chairman saying that this case is really important in the sense that it could be a barometer for Korea's financial openness. Now, do you think this case could revive concerns about foreign investment in Korea?
Well, partially I agreed, but this is a very, very leading case, and this case will have a great influence to the practice of the Korean government to the foreign investment. But I think the Korean measurement was legal under the Korean Supreme Court. So I think in this situation, I think the foreign investor in Korea have a great interest and concern to this case.
All right, I guess we'll have to keep a close eye on the second hearing that's coming up on June 29th.
Yes.
Thank you for coming in today.
Thank you very much.
And that wraps it up for today, but we'll be back tomorrow at the same time, same place. So don't forget to tune in then. Until then, goodbye.